Welcome to another video of Late Night Stocks. Today we will talk about effects of chip shortages on automotive and semiconductor stocks. First we will check the updates from NIO, then we will have a look at the other EV stocks like Tesla, Li Auto, BYD, Xpeng and so on. After that we will look for the opportunities in semiconductor stocks. Micron Technology and AMD will be in the focus. Let's see which opportunities we have in this moody market. Chinese EV maker NIO announced second quarter results that exceeded estimates and guided to strong deliveries revenues for the third quarter. Vehicular margins, however, slipped sequentially. The company also said it's on track to launch 3 new vehicles in 2022. NIO reported a second quarter loss of $52 million, a loss of 3 cents per share on non-GAAP basis. Revenues came in at $1.3 billion, up 127% from the last year's $550 million and exceeding the consensus estimates of $1.29 billion. NIO ended the second quarter with a cash balance of $7.5 billion compared to $7.3 billion to first quarter. The month-over-month decline resumed in July with the global semiconductor shortage blamed for the predicament. NIO delivered 7,931 vehicles in July, down about 2% month-over-month, but 125% year-over-year increase. CEO Li said, "We aim to deliver 3 new products based on the NIO Technology Platform 2.0 in 2022, including ET7, a flagship premium smart electric sedan." NIO's forward outlook. NIO guided to third quarter deliveries of 23,000. There is still time ahead to deliver 20,000 monthly. They already made a deal, but it is not easy to ramp up. They are far from that. NIO shares locked in a range after scaling an all-time peak of $67 on January 11th. NIO's shares were range-bound until mid-February. The stock then retreated and hit a low of $30 in mid-May. NIO bounced back from the low and began tracing an uptrend. In the process, hit a near-term peak of $55 in the 1st of July, only to pull back subsequently. After the sell-off on Chinese stocks, now trading below $40, in the worst case, the stock can go to $30. If you want to be in automotive stocks, you can start buying and add when it dips. I bought NIO from $41 and my price target is $60 per share. When we look at the other automotive stocks, the Chinese EV makers in a sell-off now. Let's check and compare their valuation in relation to their forward revenues. Here's the table to compare Chinese EV makers and Tesla. I think you already know this table from previous videos. We look here for forward price to sales ratio to understand the valuations better. Tesla, NIO, Li Auto and Xpeng has very similar price to sales ratio around 12 for 2021 and 8 for 2022. Lucid is still very overvalued in my opinion. They are not expected to reach $1 billion revenue even in 2023. I wanna also show you the future profitability of these companies. Here's a similar table where we see forward P/E ratios of EV makers. Only Tesla and BYD are profitable. These values are updated and calculated in real time. You can reach this stock analysis cheat sheet via Patreon, clicking the link in the description. Checking both tables with price to earnings and price to sales ratio, Tesla is more reliable in my opinion. It's an American company, they have a great CEO and they don't have any risk of Chinese stock sell-off. When we look at Tesla, my price target is $750, but it is not worth to buy from these prices while we see the chip shortages in the news. If the stock comes to 550-600 levels, then we can consider add Tesla to our late night stocks portfolio. We all talk about the chip shortages, but what is the current status? Why can't we solve still this issue? Will it extend to 2022? Let me summarize all these answers. A global microchip shortage has seen vehicle production stall. Waiting lists for new cars date back months and used cars being bought up, which has pushed every second-hand car's prices through the roof. Because of chip shortages, automobiles are built missing components and they are waiting for chips so that cameras and sensors are produced so that they can deliver to customers. Computer chip makers, like all other manufacturers, temporarily shut down operations when the virus hit at the beginning of 2020. However, massive demand from tech companies triggered a quick start to try to fulfill skyrocketing orders for laptops to work from home, as well as tablets, game consoles, and other devices to keep people occupied during lockdown. Considering that the cars are not in the priority list of chip suppliers, we can begin to understand why the sector is being hit so hard. With tech products like smartphones and televisions having shorter sale and life cycles, brands developing and producing them at a pace are placing the biggest orders for the latest, most expensive and most profitable chips going. Waiting lists for some new cars are well over 6 months. For some, assembly lines have ground to a halt. Jaguar Land Rover was forced to pause production of vehicles at its UK and Slovakian car factories. Mini temporarily shuts its Oxford plant due to chip issues. BMW said it has had to change tack due to shortage. Volkswagen warned of worsening supply shortages. They said they built 100,000 fewer cars so far in 2021. When will this all be over? Car bosses fully expect the chip shortage to drag on 2022. So this shortage will still continue this year. This means premium prices for semiconductors and more profits for semiconductor makers. Let's compare 7 US semiconductor makers looking at their PE ratios and market caps. Here's the similar table where we compare Micron, Intel, Nvidia, Texas Instruments, AMD, AMD, and Micron Technology. I want to have more focused, profitable companies with more than 20% growth. So these companies are Micron Technology and AMD. For example, Micron Technology is in the late night stocks portfolio. For portfolio access, you can check the Patreon link in the description. Micron Technology had a sell-off recently. Let me update you with the recent news. Memory chip maker Micron Technology is benefiting from an improving business climate. After a pullback from its recent surge, some investors might be wondering, is Micron stock a buy right now? The memory chip market hit the skids in the second half of 2018 when sales of smartphones, personal computers, servers, and other gears slowed. But memory chip sales rebounded in the late 2020. Micron makes two main types of memory chips, DRAM and NAND. DRAM chips act as the main memory in PCs, smartphones, and other devices, working closely with the central processing units. NAND flash provides long-term data storage. Micron stock fundamental analysis. On the 13th of June, Micron beat Wall Street targets for the fiscal third quarter and guided higher for the current period. But Micron stock fell 5.7% on the report. Investors fretted about moderating chip cost reductions and rising capital expenses. Micron earned adjusted $1.88 per share on sales of $7.42 billion in the quarter ended June. Analysts expected earnings of $1.72 a share on a sales of $7.24 billion. On a year-over-year basis, Micron earnings jumped 129%, while sales increased 36%. It was Micron's fifth consecutive quarter of sales growth on year-over-year basis. After 5 down quarters, Micron's earnings rose 4th straight quarter after 6 down quarters. I think they are in a good track. It is not easy to do 4 straight quarter earnings growth. Cyclical downturn ahead? Transfor said contract prices for memory chips used in the personal computers will decline by as much as 5% in December. It cited high inventories of DRAM chips in the supply chain. However, some analysts on Wall Street pushed back and saying the memory chip market remains strong and is more than just PCs. Micron unveiled memory and storage innovations across the portfolio based on its industry-leading 176-layer NAND and 1-alpha DRAM technology. On the 2nd of August, Micron announced that it will begin paying a quarterly cash dividend. The initial dividend of 10 cents a share will be paid on 18th of October. Micron stock rose 4.2% on the news. When I look at the stock price, $65 to $70 can be good resistance. I also have this Micron stock in my portfolio. My price target is $100 in the short term and $150 in the long term. This is not an investment advice, please do your own research. Let's have a look at the other profitable semiconductor stock with 20% plus growth. Is AMD stock a buy after chipmaker's second quarter earnings report? AMD stock jumped to an all-time high after chipmaker reported second quarter results, but with a pullback in shares, some investors may be wondering, is AMD stock a buy right now? AMD has staged an amazing turnaround over the past 6 years, fueled by the new products and improved profitability, and AMD stock has climbed a result. The company competes with Intel in making central processing units or CPUs for personal computers and servers. It also rivals Nvidia in the market for graphics processing units or GPUs for PCs, gaming consoles, and data centers. Current Chief Executive Lisa Su is making the difference since October 2014. Under her supervision, AMD jumped ahead of Intel in making CPUs at a smaller node sizes, giving its products an edge in speed and performance. AMD is now developing chips at a 5nm scale. In July 2020, Intel announced a 6-month delay in the production of its already being scheduled 7nm processors. Intel now expects to ship its first 7nm processors in late 2022 or early 2023. By the time Intel is making 7nm, AMD could be making 3 nanometer. The situation has helped AMD to take market share from Intel in the PCs and servers. On 27th of October, AMD announced an all-stock deal worth $35 billion to buy Xilinx to expand its growing data center business. Critics said the acquisitions complicates AMD's clean investor story around market share gains in processors. When we compare AMD and its rival Intel, Intel stock has $213 billion market cap, whereas AMD has $130 billion. AMD is faster at bringing disruptive technologies to market, so I think eventually AMD will reach $200 billion market cap. This means our price target is $150. When we look at the stock price over time, I think that we may still see some correction. Between $90 and $100 can be good potential to buy, with 50% upside to $150. Of course, please do your own research. As a result, if you have automotive stocks in your portfolio, you need to be patient due to these chip shortages. Winter earnings can be tough, but you can lower your cost average. For semiconductor stocks, due to extension of these chip shortages, we may see a second rally at the end of this year with strong earnings. I hope you enjoyed the analysis. Please give a like and comment so that video can be ranked higher. See you in the next videos.